Yes, China, the last couple of weeks, they have introduced new laws that are restricting the capital outflow, especially for real estate and other investment types. They've taken the de facto rules that were already in place since January, since earlier this year, and made those de jure, made those actual legislation. So there's certain restrictions that apply, and exactly how those are going to be carried out is not yet clear. And so, yes, during this year we have seen some drop in investment volumes. If we look at the first half of 2017 compared to the first half of 2016, still the Chinese have been very strong. But what this comes out to is the government doesn't want the investors to be going overseas, but the investors very much are still worried about the Chinese economy and are still wanting to go overseas. So it becomes like we're squeezing jello. GY data shows that searches are still up in 2017 after the new regulations, the capital controls have been introduced. I was speaking yesterday to the CEO of a private equity investment company that's done many real estate deals in the US, and he was saying, yes, he thinks this will affect some of their institutional investors, and so they may shift focus a little bit and start raising their money from more individuals. But they are still very much focused on US real estate. Another private equity firm I was in touch with today, they are pursuing a $700 million portfolio of properties in the US. So they are still very much looking after these big opportunities and standing by, ready to execute. The National Association of Realtors also has reported recently just the continued growth of Chinese investors in residential real estate, $32 billion in the last 12 months. And that compared to the overall picture of foreign investors being $150 billion in the last year. And so Chinese are only making up 20% of that. So as to how is this going to affect pricing? How is this going to affect your market? Probably not a huge amount in most markets. The Chinese account for only 20% of foreign buyers, only 2% of total dollar volume of resale home sales, according to the NAR 2017 report. So not a huge effect. But what we are going to see moving forward is we're going to see continued investment from mature, sophisticated investors in a regulated environment. So many of these partners, they already have money overseas. They have entities in New York, in Singapore, in Hong Kong, where they can issue stock, issue debt, and get US dollars quickly. They can quietly partner up with asset managers. They can quietly partner up with sponsors overseas. They've already done deals. They know people. They've got their solid connections in place, and they're going to keep away from the press reports. They're going to do things under the radar so as to avoid the scrutiny of authorities back home. These are savvy business people. The Chinese have been investing in real estate for decades, for the last 3-4 decades, and they've made a lot of money there. They understand it. They want to get there. They're worried about the Chinese economy. They want to get their money overseas. And real estate is something that they like. It's very tangible and they believe in it. And whether or not these restrictions are going to apply to the developers, the large developers like Greenland, Vanke, others, is yet to be seen. The current regulations are not very clear, but real estate development is their primary business, and so it's likely that the Chinese government is continue to support them, helping them to go global and continue doing that. But China wants to control. They're trying to keep as much money at home into the Chinese economy, not going into other places, because that will help to boost up the Chinese economy. But these Chinese investors who are worried about the Chinese economy, they want to get their money outside. They may have other priorities.